Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, April 11th. Well, happy Friday, everyone. For a change, rather quiet two-sided trade here overnight. As I speak, several agricultural contracts are making new highs. Right now, corn is 2 to 3 better. Let's call it 3 to 6 better in the beans. Wheat prices, the leader to the upside, up between 5 and 10 cents. A little bit lower in the meal, a little bit higher in the bean oil. Crude oil is steady right now as it hovers near $60 a barrel. And futures are pointing to a little bit of a rebound here on Wall Street, with major indices looking about 0.25% higher. U.S. dollar just continues to plunge here, falling to a fresh 3-year low overnight. China has raised tariffs on U.S. imports to 125%, while indicating that they will not match any further increases by the U.S., as U.S. products are already no longer marketable in their country. Their Trade Commission has stated that further increases would be a joke and economically meaningless. So as the U.S.-China trade war heats up, so has Chinese purchases of Brazilian soybeans this week. They are believed to have bought about 40 cargoes of beans from our South American competitor. Farmers in Brazil have reportedly sold just over 50% of this year's crop, which would be a record high for the month of April. Here in the U.S., the export sales report yesterday showed outstanding sales of U.S. beans to China and unknown had slipped to about 79 million bushels. That's still above the 49 million at this point a year ago. Harvest in Argentina just continues to be a slow go. Yesterday, the Buenos Aires Grain Exchange reported corn harvest advanced only 3% in the past week to 23%, while bean harvest just getting underway at 3% done. That is well below the 11% from a year ago and the 5-year average of 7%. Yesterday's WASDE report was friendly for corn, ending stocks falling 75 million bushels to 1.465 billion. USDA raised that export forecast 100 million bushels while cutting feed usage 25. July corn's made a fresh 6-week high here overnight as prices are creeping back up towards that $5 level. Corn market has shed a lot of excess speculative length here in the past 2 months, and it appears now they have been reloading a little bit. They've been net buyers here for the past 6 sessions. I'd look for old crop prices to continue to gain on new crop, with new crop acres expected to expand about 5 million acres here this coming spring. Warm temperatures, particularly for the western corn belt, should promote good corn plantings here in the second half of April. I wouldn't call yesterday's USDA report friendly for soybeans, but it sure wasn't bearish in either. Ending stocks did slip 5 million bushels to 375 million. I think just the collapse here in the U.S. dollar has tilted prices to the upside. July beans filled the gap now from last week, while currently challenging moving average resistance just above that 1040 level, with U.S. acres expected to slip to a 5-year low. It wouldn't take much of a weather problem this summer to significantly tighten up both the U.S. and the global balance sheets. Wheat also rebounding here a little bit from yesterday's negative WASDE report that showed ending stocks increasing 25 million bushels to 846. A little bit more than expected, as we saw a big jump in the hard red winter wheat stocks, so Kansas City is underperforming relative to the other class. Yesterday's wheat corn spread did fall to a new low, trying to encourage some additional wheat in the feed rations. Thank you for listening, everyone. I hope you have a great day and a great weekend.